We're talking life, money and confident finance with Amanda Redman of Amanda Redman Financial Planning Services. And Amanda, today we're talking about passing on wealth tax efficiently, because as the old saying goes, there's only two certainty in life: death and taxes. And obviously most people do want to try and pass something on to their loved ones rather than gifting it all to the Chancellor.
Indeed, yeah. And talking of chancellors, there's a really great quote from Roy Jenkins. And he said, when he was Chancellor, inheritance tax is a voluntary levy that is paid by those who distrust their heirs more than they dislike the inland revenue. And what he was getting at was that it is a voluntary levy in the sense that there are lots of ways of minimising or even avoiding paying inheritance tax altogether. Obviously, we only advise on HMRC approved exemptions and ways of doing this, but there really are a lot of different things that can be done in order to minimise inheritance tax.
Okay, well let's have a chat about some of them. What are the first steps that you should take to make sure that the money goes where you want it to rather than the state taking it?
Yeah, and so the very first step is to make sure that you have a will in place, which is something you can consult a solicitor to help you set up, because that will then prescribe exactly who you want to benefit from your estate. But then there are various exemptions that you can deploy each year to try and reduce the value of your own estate. There is a threshold which currently could be up to £1 million for a married couple, given certain criteria, and it's beyond that threshold that one would start paying inheritance tax on the second death, again if you are a married couple. But there are things like a £3,000 annual exemption that you can gift, and that money is immediately outside of your estate. There's also a fantastic mechanism which not many people are aware of, which is something called gifts out of regular income. So if you have more income than you need to maintain your own standard of living, you can start to gift that to children or grandchildren potentially, and it would be outside of your estate immediately. If you have larger sums of money that you feel you no longer need for yourself and want to gift, then that can be done either directly or into a trust. But this is where the 7-year rule kicks in that a lot of people are aware of, namely that you have to live for a further 7 years before the value is deemed to be outside of your estate.
But you can change that 7 years, can you? You can bring that total down. 7 years is a long time, obviously, that you have to kind of plan that far in the future. Are there ways that you can actually change the financial planning to shorten that period of time at all?
There are a couple of solutions that can be effective after just 2 years rather than 7 years. But these are quite specialised solutions that are not going to be suitable for everybody. But given that there are so many different options, it is important to get financial advice so that a financial planner can work with you to determine what is going to be exactly right for your own personal circumstances and what the best way is to achieve what you want to achieve for your family.
And talking of family, of course, families are probably a lot more complicated than they used to be traditionally. You know, lots of people have divorced, remarried, they'll have stepchildren, blended families as they call it. There's lots of stuff you need to think about around that.
Yes, definitely. And that comes back to the first point really, which is the number one step to take is to make sure you've got a will in place that reflects your wishes. Because if you die without a will, then you have no control over how your estate is distributed. And there are a couple of quite famous people that have died without a will. I can think of a couple, Barry White and Salvador Dali. Both died without wills in place, with very large estates and lots of family members then fighting over the estate, which in their cases did go through the courts and took many years and many hundreds of thousands of pounds to resolve. But at the end of the day, if you don't have a will, then you can't necessarily determine where you want your assets to go.
Of course, another complicating factor these days is that we're all just living much longer.
Yes, I mean, that's a trend that obviously is likely to continue, and it does fundamentally change the thought process. In the past, where life expectancy was maybe mid-70s, an inheritance would be received by the children at a stage in their lives when they might still have young children themselves. But nowadays, a lot of us are going to live well into our 90s. And at that point, your own children might be in their 70s, late 60s, 70s. And that might not be the time of their lives when they really need that money. So what I'm seeing a lot of is this trend towards lifetime gifting. So that means making a gift to children or grandchildren, particularly helping grandchildren onto the housing ladder is quite a common thing. So that the family can benefit from your money whilst you're still alive, as opposed to just leaving it and inheriting it when you're dead.
And I would presume that the more money you have, the greater the total estate of wealth there is, then the more there is for the taxman to get his hands on, effectively.
Well, yes, that can be true. There is this threshold over which you then start to pay inheritance tax, and at the moment, inheritance tax is 40%. So it's a very big chunk of tax to pay, which otherwise could be going to your beneficiaries. And you're right, the larger the estate, the more complex the needs are, and the more likely it is that there won't be one particular individual solution that will be appropriate, but it could be a series of different actions.
So actually, if you've got a larger amount of money, there are more options available to you to find ways of distributing it, passing it on.
Yes, there are more options, but it also means that you might need to implement different options at different stages of your life. The thing with gifting when you are still alive is that the act of gifting means that you can no longer benefit from that money yourself, or the property or whatever it is. So you have to wait until you're in a position to be sure that you're not going to want that money yourself for your own life. So a lot of people undertake their inheritance tax planning in their 70s, even 80s, but obviously don't leave it too late.
No, absolutely. And as always, have a chat with your financial planner. Amanda Redman, thank you very much. And if you would like to have a confidential, no obligation conversation with Amanda about your personal situation, then give her a call, or of course you can always get in touch via the website.